All right, can you guys hear me now? Can you guys see my screen? Yep, all right, good. Sometimes, for whatever reason, it takes a couple of tries. Okay, hang on a second. If you guys want to follow along, go to propfirmtrend.com and then click on the trading resources and then futures trading basics. Let me just make sure. Okay, good. All right. And also I have added a link, which is this, for a giveaway. So when you guys click on that link, if you scroll down where it says log in, so just log in with whatever, your Gmail, Facebook, X, doesn't matter. And each of the little entries, if you just click on them, it'll give you like extra entries for um, a better chance to win. And then I will draw towards the end at some point. You must be here to claim it, okay? Um, I'll draw it live, and it's a free 50K test account from Lucid. So for those of you that have already been through this, I'm going to do the same thing pretty much, which is the futures trading basics. Everything you need to know about how to start trading futures. And I know we've got some um, new people in the audience. Um, uh, See, Money, I already dropped the link um, on the stream, but it's not, for whatever reason, it's not working. But I did drop it in the, hang on a second, let me drop it again. But if you go to my page, or if you just go to my profile and click on the link, Restream is kind of weird. It gives people on YouTube and Twitch can actually um, not on Twitter, which is weird. So let me just add it here as well. All right, so I'm gonna get started. Let me just check one thing. All right. So my name is Jasmine, and I will go over everything you guys need to know, how to get started trading futures. Towards the end, I'm going to execute some of the trades so you guys can see just how it works. It's fairly, I promise you, it's not as hard as it may seem. I'm going to give you a lot of information today, and it might seem a little bit overwhelming, but you can actually, if you go back to this, you can just click on this little button, and it will give you like the shortest summary of what everything I went over. So if you need to, refresh your memory, that's going to be the best way to do that. Um, some of the information you might not need. Some of it is important, especially when you're brand new at starting trading futures. From what I've noticed over the past, this is going on my 4th year of trading futures. A lot of people come to trade futures. They jump in without any of the fundamentals, without the basics, just kind of winging it. And when I started trading futures back in 2022, gosh, seems forever ago. Uh, there weren't very many people that were trading futures. So a lot of it was trial and error, and a lot of money went out the window doing that. Um, I wish I had access to something like this where, everything was in one place and I could, go over it and shorten my trial and error. So let me just do one more thing before I get started. Interview. All right, so I will answer any and all questions at the end. Please feel free to type out a question. No question is a dumb question because we've all been there where we have, been new at something. And if you have the question, I promise you somebody else will. So, like I said, at the end, I'll answer everything. I don't stop the stream or the webinar to answer questions just because it kind of throws me off. So, all right, let's get started. So, Futures 101. All right, so futures trading is basically a contract. Between a buyer looking to invest and a seller where the contract is made for the future and has an expiration date. So, how we trade them. There are two participants in futures trading. Okay. Hedgers and speculators. So hedgers protect their assets from risks, and speculators are usually floor traders. So as retail traders, we are considered speculators. Futures contracts are available on 5 different assets, such as equity index futures, interest rate futures, commodity futures, currency futures, metal futures, and they all have expiration dates. Your broker, no matter what you're using, whether you're using NinjaTrader or Tradeovate, we will, whatever it may be, Interactive Broker, they will automatically prompt you to roll over your expiration date. So here, for example, it's gonna, um, you know, give you a little notification, and then you just click update, and that's it. So equity index futures, typically it's on a third Friday of every third month. Okay, so that is S&P 500 and NASDAQ. So the quarterly expirations are on in March, June, September, and December. Okay, so right now we're in January. Back in December, a couple of weeks ago, we rolled our expirations to March. So now we're trading the March contract. If you're trading interest rates, or if you're trading, oil or gold, those are monthly expirations. And same thing, you will get this auto rollover. To click on the button, it'll get it over to the next one. Okay. So the purpose of this is to teach some of the fundamentals of how futures work, how you can trade them on your own account, and how you can get funded futures accounts. Since I believe many benefit from adding futures to their trading skill set. Okay, so let's see next. Some of the key terminologies that are used in futures trading are lot or contract. Okay, so that's the unit of the instrument. So if I say I am in 10 contracts of NQ, it just means that's basically what it means. Tick is the smallest price movement that a futures contract can make. Point is a $1 move, so $1 move or one handle. Globex is basically an electronic trading platform used for derivative futures and commodity contracts. However, traders also use the term Globex to mean overnight session of the market, so electronic trading hours. So if somebody's trading, I don't know, at like 8 p.m. at night during Asia session, they'll say, I'm trading Globex. So regular trading hours obviously is for a specific exchange, or it's typically around during the New York session or the New York Stock Exchange open. Contract month is the month in which a futures contract expires, which we just went over. Margin is the amount of money required to be deposited by a trader to open a futures position. So some of these, are kind of common sense. You guys can read through that. And let's see. All right, so first off, market is essentially futures. So we frequently discuss ES, and the S&P 500 are those. So although these futures are traded similarly to other derivatives, leverage is what they offer above all else. Futures trading is simply a very leveraged form of stock trading. So to contrast with futures, an E-mini S&P 500 futures contract offers roughly a 32 to 1 leverage. And because ES or futures trade in ticks, ES trades in a 0.25 spread. One contract changes value by $12.50 for every 0.25 that it moves. So you gain or lose $50 when ES moves 1 point. So for example, if ES changes by 10 points, you either win or lose $500. So let's say we're trading at $7,000 on ES and it moves by 10 points. I don't know, let's say it goes up to 7,010. And those 10 points that it moved, that's $500. So every, in trading S&P 500 and NASDAQ, there are 4 ticks in each point. So ES, like I said, moves, so for every 25 cents that it moves, it's $12.50. The micro version or the micro E-minis are 1/10 as small as E-mini contracts of the same type. So one MES, or the micro contract, changes value by $1.25 for every 25 cents that it moves, or $5 per point. If you're trading NQ or NASDAQ, it changes $5 per tick or $20 per 1 point, and the micro version changes value by 50 cents per tick or $2 per point. So to kind of give you guys a little bit of a contrast, the first time I traded oil, like I said, a lot of it was trial and error. I went into a contract, or I got into a trade, and I look at it, I'm like, why am I down $80? Like it didn't even move. Well, one CL or mini changes value by $10 per tick or $10 per 1 penny. So each penny or each cent that it moves, it's the tick is worth $10. So if oil is trading at $60 and it goes from $60 to $61, that's $1,000. So so I was down like 8 cents. I mean, the oil was down like 8 cents and I was, out $80, right? And then there's the micro version, same thing. It's 1/10 of it. And then this is gold. So the most often futures that we use are ES, MES, which is basically like SPX and SPY. Okay. NQ, MNQ, you can look at it kind of like NDX and QQQ, right? RTY is IWM, CL is oil, GC is for gold. Now, futures trade in a manner more, I say akin, but somebody said it's akin. I don't know. In second language. It shares, I'm just going to say akin, manner more akin to shares and options. So there's no theta, there's no IV. Stop losses can be placed at precise price points. And, each futures contract does have its own specification, including that size of the contract, the tick size, which is that minimum price movement, and the delivery date. So trading futures, trading hours, I should say. Hang on a second. Okay. I just lost my train of thought. There it is. All right. So trading hours. Futures market is open 23 hours a day. You must close out your position typically by 4:59 p.m. if you're trading on a day margin or if you're trading with most prop firms. It opens Sunday at 6 p.m. and it closes Friday at 4:59 p.m. And typically the best times to trade are during the New York Stock Exchange or during the European markets, which is in the middle of the night. You also want to check during the holidays, as the hours may vary. So, like for example, during Labor Day, futures open at 6 p.m. That Sunday night, and it closed at 1 p.m. Monday, whereas New York Stock Exchange was closed that whole day. So we don't have the same, hours. Okay. So as I spoke earlier, many new traders jump straight into trading NQ, ES, or CL. So they start trading minis instead of trading the micros. So imagine you're an options trader and I don't know, let's just say you have a $2,000 port. You get into a trade. Instead of getting into SPY or QQQ, you start off with SPX or NDX. I don't have to tell you what's going to happen to your account, because just right off the bat, that's it. Basically, you're over leveraged. Okay. Because the risk is equivalent to trading the full index value. So they don't realize that trading, like I said, trading NQ is like trading NDX, or trading ES is like trading SPX. So instead, most traders should be trading MNQ, which is the micro version here, or MES. So it's kind of like trading QQQ or SPY. So it's 1/10 of the risk. So basically, what I'm saying is don't trade NQ when your account size says you should be trading MNQ. Instead, you could do, for example, 3 MNQs, instead of 1 mini, or you can do 5 MNQs. So you can still scale up. It's just not as risky as doing, 1 NQ or 3 NQs. So let's go on to the next. And that's what I see mostly when traders start out. They go straight to that mini, and then they start blowing up the accounts. And of course, they're going to start blaming, it's the futures, it's the prop firms, it's this, it's that. No, really, it's your risk management. And, people start getting greedy when they start trading. So this right here is a comprehensive futures contract specification. This is more like a cheat sheet or cheat code. So you can see like S&P 500 ES is minimum tick is 0.25, how much it changes by, what the USD notional value is. For Dow Jones, for NASDAQ, for Russell. If you want to trade gold, it's going to tell you the same thing. Silver, what it trades at. I know a lot of people were trading silver just over the past couple of weeks when it started to push up, and a lot of them also, they made quick money, but they also lost it quickly because they did not know how to size for it. And if you're trading corn, soybeans, I don't know, euro, it doesn't matter. At the end of the day, this here is your little cheat sheet to tell you how much each tick is, so you don't FAFO and find out just by clicking buttons. Okay, so here I'm going to start off with different ways of getting funding. And I'm going to start out with funding your own account with your own capital. Okay, so you can trade micros, which we just went over, which costs roughly $2,347 for an MES lot. This is if you are trading with a traditional broker. So if you're using Interactive Brokers, if you're using Robinhood, whatever the traditional broker that you're using, TOS, or it's 23 grand for one ES lot. So you want to check with your broker how much capital you would need for these. They do tend to change the margin account, the margin amount, from time to time. But if you can use a broker that specializes in futures, That's NinjaTrader, Trade-O-Vate, AMT. I'm sure there's a few other ones. I use NinjaTrader and Trade-O-Vate. So instead of the $23,000 for the traditional brokers, Trade-O-Vate offers a $500 to $1,000 day margin or day trading margin for E-mini contracts. And micro contracts are even more affordable. So MES is only $50 day trading margin, and MNQ is $100. Now, if you are, actually, I'm going to go to the next page so that you guys can see what I'm talking about. So the distinction is basically when you purchase or sell a contract, you're not purchasing ES shares. So therefore, it costs the same amount of money to buy or sell one contract, regardless of price at which ES is trading. And margin is the term for this. So notice here how it says initial margin and then day margin. So Trade-O-Vate offers and NinjaTrader, they offer reduced margins for the day session as well as the overnight session. But see how it says here day margin? So for ES it's $500, for NQ it's $1,000. But if you're using the micros, it's actually MES is $50, MNQ is $100. So this part that on the right where it says initial margin, this is required from 4:45 p.m. Until 6 p.m. Eastern. So for like an hour and 15 minutes. So what it means is if you are a swing trader and you want to, let's say, swing over the weekend, then you need to use initial margin. Okay. If you are a day trader, you can open up a position at 6 p.m. at night and close it by 4:45 p.m. the next day, so almost 23 hours. You just need the day margin for this, for that specific contract. So for me as a day trader, as a scalper, I don't need to put in, 20, 30, 40 grand into an account to trade one contract or, whatever, even if I'm trading the micros, I can have a $2,000 port and trade, micros with it. Or, I can have a $10,000 port and trade a few ES or, NQ or whatever it is. So that's kind of the difference between the two. And I think the account minimum is like $250 to open up a Trade-O-Vate account, which is one of the lowest in the industry. So that's kind of how that works. Okay. Third way is trading prop firms. So you guys have seen all over social media, there's no getting away with it. It's just getting more and more popular, I would say. But that's to utilize a finance partner, also known as Tradeify, Apex Trader Funding, Take Profit Trader, the Futures Desk, Top Step, My Funded Futures. There are many others. There's like 60 or 80 different prop firms out there. They all have different specifications, but I'm just going to use a few of these to show you guys, the difference. But for example, Tradeify and Lucid Trading, they have a 1-day pass. So does Apex. So Top Step has a 2-day minimum evaluation where you can be funded, in as little as 2 days. Take Profit Trader, for example, has a 5-day evaluation. However, once you pass, they have daily withdrawals, whereas, with Top Step, for example, you have to trade for at least 5 days before you can start to get a payout. So as you can see, they're all a little different, right? Just kind of depends what works for you. So how it works is you demonstrate to the prop firm that you're a successful trader. You must pay to enter the evaluation, which is a sim, okay? If you succeed, you will then be given a funded account to trade with, and you pay the activation fee. Now, some firms don't have activation fees. It just depends on accounts and, prop firms. So this here is from Apex. You keep all of the proceeds up to $25,000, and then you keep 90% of the profit after the first $25,000 you earn, while they keep 10%. So again, you want to see the prop firm rules for whatever, prop firm you're utilizing. Some people get multiple accounts when it's on discount so that they can trade them at the same time. There is a trade copier you can use, and each account must pass the performance evaluation as they are all standalone accounts. Now, is this too good to be true? Not really. Most traders fail due to lack of discipline. And this is how these companies make money. Um, it doesn't matter if you're trading options, if you're trading futures, crypto, equities. Um, the sad reality is that 90 to 95% of traders fail. And it comes down to, a few things, but a lot of it is obviously discipline, risk management, strategy, whatever. But if you can trade the chart, if you are trading, let's say QQQ or SPY, right now, and you can chart NVIDIA. It doesn't, whatever you're using for your charting, whether it's Fibonacci's, whether it's moving averages, whether it's pivots, it all works on futures as well. It's the same technical analysis that you would be using. So it's not like it's something different. So there, if you can stay disciplined and consistent, you're going to make money. There are people that have withdrawn, their funds, but they're also consistent. And the worst that can happen is you lose your account evaluation fee. You do not pay back any capital. And you can also take it in the evaluations as many times, not just once, and that's it. And in addition, you can also trade your own funded accounts. Like if you're trading on NinjaTrader with different prop firms, I can link up my personal account with all the other prop firms, except TopStep. But I don't trade TopStep. But I can link them all together. There's a trade copier, and it's one click in a chart, and it actually just copies all the trades to your other accounts. I do not suggest anyone doing trade copier if you are brand new. It's best to, if you do go the prop firm route, play on a sim account first, then, pass the account and get a payout before you start adding. So in my opinion, if you want to just test it out, although they have, tight regulations, you're essentially forced to have good habits by the rules. And I'll go over some of the stuff on here, but why prop firm versus trading your own money? And this here is from Take Profit Trader. So simply put, most traders are undercapitalized. Okay, you level the playing field by using their accounts, not your own funds. And trading your own funds can lead to severe losses. However, if you're trading with a prop firm, your losses are limited to your associated challenge fee. So if the associated challenge fee is $50, that's all you're going to lose, right? You don't pay back anything. Whereas if you're, trying to learn on your own account, it's obviously going to be a different story. Also, lack of discipline haunts traders, and the risk management system and rules will make sure that you stay disciplined during your trades. Also, all of the technology, the market data, live market data, and everything is set up by them. So there's no, extra documentation or whatever to do. So let me grab a drink of water or a sip of water. And then I'm going to go to a few prop firms to show you guys, because this is important. This is what a lot of people don't understand are the drawdowns. All right, so what I'm going to actually go to, okay, this is Tradeify. Okay, so I'm just going to go to some of their accounts. So if you notice here where they say account, it says account type. There are different types of accounts. So there's growth. If you see here, $97, there's no activation fee or any of that. It's end of day trailing. Okay. If you use their select, you can pass this account within 3 days. So all you need to do is meet. So for example, for a 50K account, your profit target is $2,500. Your end of day trailing is 2,000. So what this means is that if you make 2,500 bucks over the course of 3 days, you will be funded. And once you're funded, this is where you can either select to get daily payouts or to get payouts every 5 days. So, like, which is actually here on the left side. Oh, sorry, on the right side where it says daily. I don't know, they put red pill and blue pill, but I choose a daily. I can go in and request um, daily payouts, which is, here it's a maximum of $1,000 if you do a 50K account. Other firms have uncapped daily payouts. So, that's what I'm trying to say is the different firms work different ways. And they also have a Lightning account, which means it's instant funding. So there's no evaluation. You're basically funded right away. So this is for those that are they're just adding extra accounts. They've already passed evaluations. They've gotten, payouts or whatever. I mean, anybody can buy it. You can be a brand new person that buys it if you are really good at trading, options and you know how to trade the charts and you have discipline, then yeah, you can do the lightning funded because it's you maximum end of day drawdown is 2,000. So the way you would treat these accounts, it's not like, oh, I have a 50K account. That's the notional value that they are. It's basically that you have a $2,000 account. Obviously, if you go to a 150K account, your end of day, so your drawdown is 6,000. So it's kind of like playing with 6,000. So that's kind of, notice I said these are end of day. Here, this is with Take Profit. They have daily payouts as well. It does take 5 days. They do have a 50% consistency, and I'll go over that in a little bit, what that means. But most of these firms, it's about the same. I think this is actually $100 or maybe even less because it's 40% off. But profit target for this one is 3,000. So most of the firms that have the 50K accounts, you've got a profit target of 3,000. Your end of day trailing is 2,000. This right here is the futures desk, and notice how this one has end of day or static. So my favorite, which should be everyone's favorite, should be the static account. This is where I say a lot of people don't understand the different drawdowns. So here you can actually customize your plan. Okay, you can change how much of a drawdown you want, how many contracts you want to play with, how many days to live, your daily loss, whatever it is. But this is one firm that has the best static accounts around, and they also, once you pass, you start to uncapped daily payouts. So it's not going to happen, but it could. Let's say you get a funded account, you make 100 grand. Okay, you're able to withdraw 80 grand the next day because that's there is a split of and then you get to move to a live account pretty fast with them. So live capital backed payouts. And then there's intraday trailing, which is Apex and a few other companies have intraday trailing. Some of these accounts, so like total compensation, for example, since 2022, they've paid out 650 million. Okay. Where is the pricing? Products. Let's just go here. Nope, that's not what I want. Oh, okay, there it is. So let's say trade of a plan, okay? For 50K, Same thing, profit goal 3,000, trailing threshold 2,500. So a lot of the firms that have a trailing threshold, they give you actually like extra, you know, to play with. So instead of 2,000, it's like 2,500. There's no consistency in the evaluation. And a lot of times, like they had $19 account for all of these accounts. It was like 19 bucks that ended a couple of days ago. So back to here. And now you guys are going to understand the difference between these accounts. So what is a drawdown? So drawdown is that maximum loss you're allowed to have before your account gets breached. And understanding how it's calculated is crucial for your risk management. And then also choosing the right prop firm approach. So intraday trailing, how it works, your drawdown limit moves up with your balance and unrealized gains throughout the day, but it resets to the daily starting balance each day. So let's just say, for example, we have a 50K account and 3K drawdown. Most of the firms are either 2K or 2,500. Some are 3K, but let's just stick with this one, okay? So let's say at 10 a.m. you make a $500 profit. You're up at 50,500. Your drawdown moves to 47,500. At 11 a.m., you make another $300. You're up to 50,800. Drawdown moves to 47,800. 1 p.m., you open a position with $600 unrealized gain. Now you're at 51,400 unrealized. Your drawdown moves to 48,400 because it trails unrealized gains. At 2 p.m., let's say you close the position for $400 realized profit. You are at 51,200. Your drawdown stays at 48,400 and it does not go down. Let's say at 3 p.m. you lose $400. Now your balance is 50,800. Your drawdown is still going to stay at 48,400. It doesn't go down. The remaining drawdown is 2,400, which is, 58,800 minus the 400. 48,400. So basically your day resets to 50,800. Your available drawdown is only $2,400. Now, for end of day trailing, how this one works is your drawdown limit only moves up based on your ending balance at the close of each trading day. I do actually want to mention with the intraday trailing, once you are over your threshold, so your drawdown is 3,000. So let's say you make 53,100 when you're in a funded account. It no longer trails. It becomes a static account. Okay, so that's important to note. But now let me move on with the end of day. So let's just say for a 50K account with 6% drawdown or 3K drawdown, your day one starts 50,000. Your drawdown is 47,000. Total drawdown available is 3,000. During the day, you're up 51,500, then down to 50,800. Your drawdown is going to stay at 47,000 all day. It does not move, okay? Total drawdown available, 3,000. I said it stays fixed all day. So day one, you close 50,800. Your drawdown updates to 47,800. The next day, your balance is 50,800. Your drawdown is going to be 47,800, which is $3,000 from new starting balance. And then it repeats the same thing, okay? Now, static drawdown. Your drawdown limit is fixed based on your starting account balance and never changes. So 50K account, 3K drawdown. You start your account at 50,000 and your drawdown is 47,000. Okay, so week one, let's say you grow to 55,000. And even if you go down, it doesn't matter. Your drawdown is always going to stay at 47,000. Let's say month one, you grow to 60,000. Your drawdown is still going to be at 47,000. Month 6, your account is at 75,000. Your drawdown staying at 47,000. Reality check, if you can lose $28,000 and then breach the account. So this is, the static account is more it's a lot more similar to your own personal account. You know, if you put in $3,000 and you continue to build it, that's how much money you have. Obviously, if you lose your $1,500 or $3,000, then you know you're going to breach your account, whatever the amount is. Which is surprising to me because I actually had a poll out, and 70% of traders picked end of day trailing, which is interesting considering that they don't understand what static drawdown is. I can't blame them because there's only very, very few firms that do it, and that's the futures desk allows it, which you know you can get up to $6,000 trailing of static, and also it becomes static in funded accounts once you are over your threshold amount. So how do you pick out firms? There's many different ways, guys. So this here is just an example. You know, you would look at the evaluation rules, how long it takes to, you know, pass, or so like right now, like Apex is 1 day to pass. There's no consistency. So if you hit your target of $3,000 today, tonight you would get an email saying, hey, you passed your account, you pay for an activation fee, the next day you start to trade with the funded account. Okay. Now, in their funded account, there is a consistency rule, and I'll talk about the consistency in just a little bit. You know, with Tradeify, like I said, they have that instant funding where you don't need to pass anything. That's straight to sim funded, or you can choose one of the evaluations. The daily evaluation does not have a consistency. Also, they have end of day drawdown. Take Profit Trader has a 50% consistency during the test, but once you pass, there's no what do you call it? Consistency. Okay, so let's see. Okay, this is a firm calculator, but let's just say that you want to compare Tradeify 50K %30 off with Top Step 50K. Okay, so actually this is no, this doesn't even compare because the select accounts are daily withdrawals, so the comparison actually is their growth account. So notice how, for example, with Top Step there's 50K, but they also have an activation fee of 149. So once you pass, if you choose this type of an account with Top Step, the final all-in price is $198. However, if you're using, just to give an example, Tradeify or Lucid or a few other ones, the Futures Desk, they don't have an activation fee. So once you pass, your final price is only basically half of what this is. Actually, I think Top Step changed a little bit of their rules, so this might be a little bit cheaper, the final price on this. Let's see. Risk calculators. Okay, so the consistency that I was talking about, what does that mean? So let's say you're trading, I don't know, let's just say it doesn't matter if Top Step or Take Profit Trader, they both have 50% consistency. Let's say your biggest P&L is so your largest single day profit. So let's say you need to meet $3,000 to pass an account, and they have a 50% consistency rule. That means that if you make $1,500 today, $1,500 tomorrow, you would be funded. But let's say you make $1,700 in one day, and they have a 50% consistency rule, then your balance needs to be $3,400. So for these, you would just want to keep it, You know, if you use $700, obviously that's 1,400. But if you need oops, hang on. No, let's see, 950,000 maybe. Okay, so Tradeify, they have a $2,500. You would want to just keep your 1 day profit of 1,000 or less to get to that $2,500 balance. Okay, so the point is that some of these firms have a consistency during evaluation. Others have it once you're funded. So you just want to kind of read through that and see how it works. The thing is don't try to push it. If you, just because you can pass an account in a day or 2 days, you shouldn't even try to do that. Just trade normally the way you would always trade. If it takes you 5 days, if it takes you 10 days, if it takes you 20 days, that's fine. It's not there's no rush to pass these accounts. So just kind of take it the way you would trade a real account if you had that real cash. One thing that I see is people are comparing, their P&Ls to people that are posting online. Don't do that, because even like this little just reminder, even if you make $100 a day, that's 25 grand a year. If you make $500 a day, that's $126,000 a year. So $20 a day, 5 grand, you can scale up. And with prop firms, you don't have to make 500, or sorry, you don't have to make $1,000 in each account. You can literally split different accounts and just make $100 a day. Let's just say 10 accounts, you're going to be here. So this right here, I wanted to kind of talk to you guys because this is important, and this is how people blow their accounts. So let's just say you get a 50K account, or you get I don't know, we'll do the 50K account because most people start out with the smaller accounts. Let's go to MNQ. Risk per trade should be anywhere between 2 to 5%. I typically 5% is a little bit higher risk, only because obviously you're risking 5% of your account. But that's, for me, like, I would only use that for A+ setups, and you're risking $100 to with MNQs. Okay, so these are the micros, which is $50. Sorry, not $50. 50 cents per tick. What I see people doing is they'll have a $2,000 account. They're going to start off with NQ and end up, let's just say 20 ticks. Oh, yeah, sorry, you guys got to input your losses. So your stop loss. So let's just say you have a, I don't know, 50 tick stop loss. Your risk, people will go in with 2 NQs for a $2,000 account. You're risking 25% of your account just for one trade. Don't do that. You're going to blow up pretty fast. And even here, if you guys look at the account blow up calculator, if you are at 2,000, if you're risking $500, 4 consecutive losses, your account's done. Okay, you don't want that. So if you're risking $100, you can have 20, until 20 losses until you lose the account. So, here it's going to kind of tell you how many times you need to win to recover. And this is if you're doing a reward ratio of 2 to 2. But you can go in here and play with these risk calculators to kind of, are you is your win rate typically 60%? How many trades you take, what you're willing to risk, per trade, whatever it is. and it will kind of tell you, like if you are risking 5%, your win rate is 60%. Even if your risk to reward ratio is 1 to 1, you're still going to have like a monthly profit of roughly about 1.3K. Or if you do, let's just say 2 to 1, then obviously it's going to change. So here, a lot of I don't dollar cost average into my trades, but some people do. So for example, if you have an entry price of 25,000 on NQ, and for every 10 points, you want to, let's just say max drawdown budget. This is, like your loss that you are willing to lose. It'll kind of tell you where you can kind of do dollar cost if you want to do a conservative. For every 10 points, if you're down, I don't suggest that by any means, but it's better than for those that are just kind of clicking buttons, getting in positions, and no mathematical backup to it. Okay, so these are they're called risk calculators. If you go to the propfirmtrend.com, right here, risk calculators, you can, even if you're doing options, you can also, what is it called? Check your calculator. All of this is free, guys, just so you know. This website is free completely. There's no, you can go and start journaling. So for example, typically over time, your consistency is going to be 20% or less. You're going to have big days. You're going to also have losses, but most people that have been trading, they don't go from making 50 grand today and then they're always making, $200 every other day. That is a windfall, or you got lucky making 50K in a day. So what I'm saying is that typically consistent traders will end up having consistent. Why is everybody messaging me? Sorry. Okay, hold on a second. All right, so let's get to, you can import your CSV, so you can also add your own trades, but this journal is free. One other thing that I wanted to show you guys was Risk and Psychology Lab, which basically is still going to have your position calculator, your account blowout calculator. But let's say you can do a prep in the morning before you start trading, and you can select up to 5 emotions. But let's just say you're feeling a little anxious. I don't know, maybe you're feeling greedy or vengeful. It's going to tell you you're at high risk, consider not trading. Or let's just say you've got these two, it'll give you that you've got elevated risks. So we're all different. Like for example, with me, if I am at my computer and I'm bored, I'm going to more like, if there's temptation, I might take a trade, and those are going to be typically losing trades because you're bored, right? And then you can also kind of cognitive bias checkpoint. Are you having a herd mentality? You're following the crowd without analysis. So add your little note in here, and after a certain time, you will get to a point where you're going to see your emotions. We don't all have the same emotions, so you can also put in a review of your post trade and go back through and see, okay, if I'm feeling bored, I tend to blow up my account or take losses. Start to walk away. You got to figure out what you're going to do during those emotions. Okay. So it's going to give you like analytics and patterns to kind of adjust along with your kind of win rate and what happens. So also, if you go to this trading resource, what you would want to do before you start trading anything in the morning is go to bar chart, Benzinga, Financial Juice. Check to see the news, what happened overnight, what's kind of going on in the world. And then you always want to check your trading economics calendar, Forex Factory, Earnings Hub to see what's going on. A lot of firms will not let you trade the funded accounts during red folder news or tier 1 news, which is CPI or FOMC. So, some will let you trade it up to 1 minute before and not and 1 minute after. Others will let you trade during that. So you would want to check if there's news trading allowed or not. Some will allow you during the evaluation, but just not during your funded phase. Okay. Also, another thing, like when I trade NQ or NASDAQ, majority of the time, I will have Mag 7 up. So I'll be looking at NVIDIA, Microsoft, Google, Amazon, all of those on a different screen to see what's going on with them, to see what, because it transpires over to NQ, okay? Let's see. Oh, okay, let me kind of go down here. Some of these January deals, but like I mentioned, there are many prop firms. I have about 8 to 10 that are some of my favorites, and those are the ones that I personally use. You can go down here to the detailed comprehensive analysis, and let's just say you want to do just end of day. So it weeds out the ones that are intraday trailing. Or let's say you just want to do static. It's going to weed out the ones that don't have static. There is one firm, which is this Phidias prop firm, that is a swing. So you can swing with this firm. So that's one of the few firms that I'm aware of that you are able to swing trade with. And then, down here, it's a comprehensive list of different firms. Like I said, there's about 80. There's about 80 now. I should actually have this updated. Firms, new ones keep coming out. Please don't FAFO and chase the new shiny firm that comes out. I always wait for a couple of months to see if they're viable, to see if they're not going to be trying to rug pull or change rules or something like that, which is why I stick to the few main ones that have dominated, and they're not going anywhere anytime soon. So hang on. So you can also go to this feature summary, kind of see what I talked about today. But I will go back and execute some of the trades to show you guys. Where is that thing? Trading resources. Okay. All right, so this is Project X platform, which is used by TopStep-X. Actually, TopStep owns it. A lot of firms used to have this available, but they're going away from it just because TopStep is, or Project X is just leaving TopStep on. But this is what the platform looks like. It looks kind of like the trading view. If we're going up and you think we're going to go up, you would just buy market or join bid. To close out your position, you can either flatten all, or you can, if you're scaling out, then you would just sell, whether it's market or join ask. Up here, you would change if you're trading NQ or MNQ or ES, how many contracts. It's pretty simple. On the left side, there's a little button. You can lock yourself out. if you need to, or add, an extra risk parameter. Pretty simple, guys. Next, this is NinjaTrader platform. This is what I use, just because I actually trade with order flow footprint, and trading with order flow footprint, you can't do that with Project X. You can't do it with Tradeovate. So even though I'll buy Tradeovate accounts, I can link them to my NinjaTrader platform. So that's kind of what I tend to do. You can add third-party indicators with NinjaTrader platform. So right here, this is the Tradeovate platform. Very user-friendly, easy to use. Same thing, buy market, sell market, buy, bid, sell, ask. ATM is where you would want to add your stop loss and or take profit. I will say that having a stop loss is very crucial. A hard stop loss. There's no PDT, so you can get in and get out of your trades. And you don't have to chart on Tradeovate or on NinjaTrader. You can, if you're using TradingView, that's fine. If you're using TOS, that's totally fine as well. Let's see. This is what order flow footprint looks like. I don't know if you can see it because it's a screenshot on here, but oh yeah, it just kind of gives you more in depth in a candle what's happening, like, or on my specific levels. Negative delta, positive delta, all of that kind of stuff. I'm actually working on a free course. It's going to be here in this trading resources. It's not ready yet. Also, there's some strategies and setups you guys can go through. But when it's ready, I'm going to have it added in here, and it'll take a couple of weeks to get it done. So there's that. And all right, let me get to TradingView. I'm going to do some trades for you guys just to see how it works. All right, so let's start here. Okay, so remember I talked about one contract. Oopsies. Okay, so here's the DOM. Some people use the DOM. I don't. I just use the orders. I'll just do market. Okay, so let's say I have, now let's click sell. Okay, so that's one contract up here. Well, and this is NQ, okay. Obviously, this is over a day. I'm just going to stop here. It doesn't matter. But get away. So see how just one NQ moved really quickly? It was up like 7 or 8 grand. And let's do the same thing doing the opposite. Let's say you don't have a stop loss. Look at how fast you're going to lose your account. And there's no reason for that, because futures, it moves fast. Hence why it's important to, okay, I'm just going to do that. Stop it. Why is that stopping? Wait, no. Jesus. I'm so used to, I'm not used to executing on, what do you call it? On TradingView. So now let's do the same thing with micros. Okay, so let's just say we want to do one micro where we sell. You can even add more, but just for the purposes, notice how here it says, oops, no, what did I do? Damn. Okay, so when you go and search, for example, for MNQ, notice how TradingView, it's got a little collapse button, you would want to go to the correct contract, which is right now it's March. The continuous one is not the best, so you always want to do that. Did I get into that trade? Okay, let's do the replay again. I'm going back to just to January 2nd to show you guys just quickly how fast it can move if you do not have a stop loss. And it's, you know, always good to have a stop loss. You can always re-enter. Okay, let's just do sell. So just with one MNQ, it was already like $600-700 down here. Okay. This is the one that's only like $2 per. What the heck? Okay, same thing. This is MNQ. If we bought, look at how fast you would be down just with one small contract. So if you have a $2,000 port, no stop loss, you know, you're risking way too much for it. So this is why sizing is very important. So every 25 cents that it moves, which is the 0.25, 0.25. Actually, let me show you guys trading panel. The DOM. So see how the DOM is 0.00, 0.25, 0.50, 0.75. That's where I, you know, all of these, it moves in a 0.25 spread. So ES moves, you know, $50 per point. So if we sold at this one contract, although I don't trade ES anymore, it's been many years, it is definitely not as volatile as NQ, just so you guys know. So and MES, let's just buy here. This is $5 per contract. So every 25 cents that it moves, it's $1.25. That's basically it. There's no, like I said, there's no theta, there's nothing like that. Okay, let me also do a drawing and then, or actually, let me do some questions first and then I'll do the drawing. If I can find the stream. Alrighty. Okay, let's see, scrolling. Okay. Okay, you'll stick with ES 23 hours a day. CWIC, yes, it's 23 hours a day. You can, there are firms that, you know, will allow you swing trading. You can also fund your own account. And like I talked about, the initial margin, you can do that if that's something you would want to do. Hang on a second, let me go back to prop firm trend to show you trading resources. Hang on a second, let me log in. So remember I talked about the day margin and initial margin. So if you want to swing, you can. There's two ways that you can do it. One is if you are wanting to swing like over the weekend or something, you can either utilize a prop firm that has swing trading, which is Phidias, or you can, trade if you're trading with your own account, you can do micros. But this is what you would need in your account to trade that. Or you can trade for pretty much almost 23 hours with this day margin and with prop firms. So they allow you to open up a position at like 6 p.m. and hold it. If that's what you want to do, is hold it until the next day before the market, closes. The market is only closed for like an hour and 15 minutes. So for me, if you really want to swing trade and you utilize the smaller like day margin or even the prop firm, open a position at 6 p.m., close it the next day at 4:40 or whatever the firm has, listed on there. I think like Top Step is closes at 4:10, and then open it back up at 6 p.m. So you can do that. Yep, MES micros. Yep, the micros are going to be what you want to do, and not start with minis. So as I showed, like if you guys saw the move on one NQ without a stop loss, for example, 7K in less than a couple of hours, versus, obviously that would be your loss too if you were in the wrong position, versus, with one MNQ or whatever. But, you can do 3 MNQs, 5 MNQs. So let's see. Future is all about trading in Tradovate only, no project X. Yeah, most are, trading in Tradovate. Top Step is recently making lots of issues with traders' payouts. Yes, I've seen. Okay, if you're a profitable options trader with 12 years of experience and want to give futures a shot, then what is the happy path to get started? There's so most of us came from options. There's a little bit of a curve, learning curve. It's not going to be, I just kind of executed. So if you are trading, some people will actually chart QQQ or SPY and trade NQ or sorry, MNQ or MES off of the off of that. So I think the learning curve is not really like if you just go to TradingView and just do what I just did, pull up NQ, pull up MNQ, and just play around with it, you're going to see how it moves. But yes, you definitely want to try it on a sim account. So with these prop firms, you will get like practice accounts. And you're right. The futures desk has CWIC. If I was you personally, I would do a static account just because it mimics, a cash account. And also the key is to go slow, yes, until you understand how it works. I love Tradeify as well. I like their select accounts, which, takes 2 to 3 days, 3 days to pass pretty much, and daily withdrawals. Take profit traders, the same, yeah. top 5 futures firms are Apex, Tradeify, TPT, My Funded Futures, and Lucid. I agree. I know like people talk about, each firm has its own uniqueness. So while people might not like some of the rules that Apex has, that is one firm that has produced the most multi-millionaires, which is, it's a paradox because they do deny payouts when people don't follow the rules. And no matter what firm you're trading with, you should go and read the rules regardless. But the reason is because with Apex, they have a lot of like their accounts tend to be on the cheaper side, especially when they are on sale. So they had like $19 accounts, for a 300K account for 19 bucks. So that's when people stock up when they're on sale. And then, if you pass 20 accounts and trade them together, obviously you don't need a big balance, to times 20, right? To start pulling out, money with them. Static, yeah, I would say static is yep, there is a little bit more of a cost associated with static, but I would I suppose, either end of day trailing or static would be probably the top 5. What's the cost for static? So it depends. If you go to the futures desk, so for example, Apex has a static account, but it's only 625 bucks. I personally would not touch it because $625 is nothing when you're trading, like at least for me, when trading futures. Whereas like the futures desk, you can scale up to $6,000 of a static account. Let's see. Thank you, Fenster, for answering these questions. I'm trying to determine if my trading style would fit. I can day trade with the best of them, but I prefer 3 to 6 times on my cons, and I trade with. So when you're talking about options, you prefer to go out 3 to 6 months. The thing is the reason why most people go out with options that that long is because of all of the factors that are working against you, which is the Greeks. The theta, the IV. There's no such thing with futures. So as long as you're in the right direction, it's kind of like trading stocks. If you bought Nvidia, let me pull up Nvidia. Why is this always an RTH? Jesus. If you bought Nvidia from here, let's just make it easy. Let's just say 190. And it came down to, I don't know, let's just say 180. You bought one share, you would be down 10 bucks, right? It's not the same as buying an options, options where you've got the decay of, you've got the theta, you've got the delta, you've got IV, you've got all of that stuff. You don't have that with futures. The difference is that with futures is that each 0.25 that it moves is a specific price. So each tick is let's see. Where am I? Okay. Let me just close that out. So each tick has a specific value. So if you see, if NQ is at 27,000 and it goes from 27,000 to $27,001, that $1 is 20 bucks. And a lot of, so CWIC, what a lot of people that do trade options and futures, a lot of them, what they do is if they have, dated options for a couple of months out, they trade futures more on on a day trade or scalping while their options are marinating. Yeah, it's more linear with futures. And I'll also say this is my 3.5 years of teaching futures that most that have traded futures or that have traded options and came to trade futures. I would say 90% of them have left options. And I think I just know 5 people out of thousands that have went back to options, and then the rest are either trading both options and futures. Yeah. You've never heard someone say FAFO like that? No, you can trade from a mobile. It depends with what you're trading. TraderVate has mobile, NinjaTrader has mobile, even Project X has it. CWIC, I am an EMA trader as well, and NQ especially respects those. Um, and most others that I know trade with fibs as well, and it respects it very well. So, like I said, I know people that chart QQQ, but they'll take the trade on NQ or MNQ, and vice versa. There are people that trade with or will chart SPY, but execute on ES or MES. I personally just chart on NQ. You can use whatever charts. Here's like what I'm going to show you guys something. The way I usually don't go into the technical analysis part of it, just because everybody has their own way of doing things. And I do teach technical analysis in Discord. Um, where are my? Oh, I don't have my indicators on here or the technical analysis that I use. Let me see if I can. I don't know why I keep saving and closing. Why do I have so many layouts? I don't even know what these layouts are. No, that's not it. Is this it? Nope. These are like different things that people will like talk about that they're trying out. I stick to pivots and moving averages. Another thing that I do is called initial balance. You can just go to okay, this is not it, but why do I have this one? January 9th. Okay, let's just go to NQ. I'm going to show you guys a little bit. So notice how these pivots, guys, they're just called traditional pivots. As long as you have this input traditional daily and uncheck this little box, it's pretty on point, especially like with NQ. I mean, look, it gets up to even down here. I mean, this is a $26,000, instrument, and it gets almost within $2 or $3 of. So, what I do in the morning when I'm trading NQ is, oh gosh, I use my moving averages. No, not those. Sure, what I use NinjaTrader. That's why, like, for me, I don't really use anything on here. But so I use moving averages, pivots, relative or RSI, and where is the initial balance? Okay, there it is. So in the morning, what I do is I will look at, I don't know why some people have it on the regular trading hours when they're trading futures, which is not my cup of tea, but okay. What you would want to do is always check to see, like overnight session, what happened overnight, where did we, whether it was London or Asia. You just want to kind of mark off where we were, and because that's going to be a key, area at. I don't know why I can't find my damn template that I use and why they're all unnamed. Open layouts. Do I have any of them? No, I need to clean this out. But anyway, you want to mark those out and see where we were, in the morning, at night, because that's going to be a key level. If we go, and grab that liquidity overnight. So look, for example, here, this is Thursday. Okay, so a few nights ago, Asia came down to whatever this is, 25,625. And notice how, like, when we opened, we actually took out the Asia low, which was about, we went and grabbed that liquidity and went back up. So that's important, guys, to know. It's kind of a, I don't want to say it's a cheat sheet, but in a way it is. Mark off, and a lot of times we will revisit whether it's Asia low or Asia high, once we open. So look, we took that out and back up. So that's something to kind of, look at. Same thing. Same thing here. Typically, like, this was London session. We tried to go up, rejected, came down. Then this is the pivot area. So that's something to just mark off. Go find an indicator. What did I add on here? This one is Edgeful, but you can, I'm sure there's other initial balance. Hold on. Initial. Yeah, so Voxalgo has it. Just add it. It's free. I think it's free for you guys. I have a Luxalgo account. But so yeah, that's one thing too. But whatever you're using with your EMAs, with your fibs. Let's see. I don't use fibs, but you can. Some people use opening range also. I don't really use that as much. Um, so, how much does news and macro impact futures? A lot. It depends which news. That's another thing. So when we are trading, like in my Discord, we have financial juice up most of the time because you're gonna get a candle, and we've all seen this, especially if you're trading like NQ or whatever, or even MNQ. It will be freaking 90 points. One candle will, be 90 points in seconds when there's something like with news that comes out. That's why it's so important to have a um, what is it called? A stop loss, because you don't want the market to give you the stop loss. You want to be the one in control of a stop loss. Um, so that's why I always check beforehand what the economic calendar, what we have. I don't like to be in a trade during um, news, even if it's like if you go to forexfactory.com, even if it's like an orange folder, I don't like being in it. Just because a lot of times it's just the algos sometimes that are, wicking around until it gets a direction. So what confuses you about the funded account? Usually traders move from NQ to ES. Beside the volatility, what really made you give up ES? It depends on your style, yeah, on your style and risk tolerance. I will say the a lot of people will start out with ES and then move over to NQ. I personally like the volatility in NQ. Um, to me, ES moves too slow for my style because I'm more of a momentum trader. So when I'm reading order flow footprint, if I'm looking at my key levels, then I'm just gonna I take my trade, and I can be done in minutes for the whole day. Be up a couple of grand on my accounts, and I'm out. Obviously, if you have a loss, it's gonna be the same thing. But just play around on a sim account, whether it's both with ES and or MES and MNQ. One thing I do want to mention, guys, when you get to a sim account, try not to play with if you're trading NQ, okay, try to play with if it's just one NQ, instead of trying to, like, some people will go in just for like fun. They'll add 15 or 20 or 50 NQs just to see a P&L of 100 grand or 200 grand, whatever it is, quickly. That's a There's a dopamine hit that you're gonna unfortunately start building a bad habit, and it will transpire. Even if it's your evaluation, it's going to transpire into your evaluation. It's going to transpire in your funded accounts, and that's how people blow up their accounts. It's really due to sizing. It's majority of the time that I personally have blown up an account is because of sizing. And that's, and the thing is people people blow up accounts all the time. The way everyone needs to look at it. So, for example, no, that's not it. They call it accounts or whatever, but yeah. So let's just say you go to Tradeify, buy a select account, a 50K account. It's $111. So I invested $111. I passed it. I take out 4 or 5K, just to give an example, for an account, out of an account, and then if I let's just say I blow it. Well, yeah, I blew an account, but technically I put in $111 and I made a couple of grand what's my ROI? At the end of the day, it's really ROI. So it's like, let's just say you went in playing options for you put in 111 bucks, you got 4 or 5 grand out of it. And yeah, you blow it because you pulled money out. Um, okay, you still made that percentage. So people kind of have a negative, yes, you should not be blowing accounts left and right by any means, especially if you're not pulling money. But the way you look at it is, what's the ROI? If I put in $111, I pull out a couple of grand. Guess what? It paid for itself and I made money on it. So, CWIC, you don't have to use a prop firm and you can start trading your own money. The way you would do that is you would go to Tradeovate or NinjaTrader, like I talked about a little bit ago here. So you go to like tradeovate.com or ninjatrader.com. You open up, if you put in 2 grand, you can trade the micros. So the day trade for ES, it's going to be $50 for one contract. Okay. And that's for you to be able to trade it between 6 p.m. Eastern until 4:45 p.m. Eastern. However, I will say personally, when you are learning, either go to tradeaway.com or ninjatrader.com and go into they have a sim accounts. Okay. Play with the sim account before you put in any money. Also, there are accounts you can get for like 20, 30 bucks. If I was you, I would invest that 20, $30 into a prop firm to just test the waters, because when you're playing on a sim account, we all know there's no feeling, there's nothing, right? But even when you put in 20, 30 bucks into buying an account from a prop firm, it will shed a little bit more light to, how things move. But you're not putting up 2 grand and possibly losing 2 grand, because it's not like options where, if you buy a contract for 100 bucks, that's all you can lose. With futures, it moves so fast, you can lose your money really quickly. So I mean, that's just the way I'm thinking. Like I said, you don't have to use a prop firm by any means. I chart NQ. I don't chart QQQ, but I do have, like, I'll watch NVIDIA, Microsoft. If typically, guys, if Apple is going up and the uh, NVIDIA and Microsoft and the rest are, pulling back, we're going to get a drop on NQ, because what they're doing is rotating money into a safe stock, which is Apple. If Apple is flushing and the rest of them are going, more likely than not, we're going to go up. So, it used to be before where they correlated. Also, ES and NQ a lot of times correlates the same, not always. Sometimes ES is, moves like 20 points, 20, 30 points in a range, whereas, NQ moves 200 points, giving you more room for your trade to work out. AMP futures, yeah, that's another one. I haven't used AMP futures nor EdgeClear. Yeah, they all play together. Yeah, the 100K static on Apex is not good with the $625 drawdown. It was the first one I ever picked and the first one I canceled. I wouldn't do it. The first time I tried it was 3.5 years ago, and the first trade or second trade I got in, I blew it because, I was doing trial and error, and I'm like, $625 is not enough unless you're playing with one micro. And what EMAs do I use? I will. I'm going on vacation tomorrow morning, and I will be back next week. And during that time, I'm actually going to probably spend some time, I know, on my vacation, finishing up that course, and that's going to have everything that I use. It's free on this website. So, oh, maybe you're asking, can I explain FFMAT? I will when uh, Patrick, you're in the Discord. I'll show you where to look for that. Oh, he already hopped off. Yes, Smooth Operator said, I think another thing to consider if trading NQ or ES with props is that most 50K accounts have a 2000 daily. NQ true ATR these days is around 350 points. ES is around 70 points. ES is better for prop firm risk management for most beginner intermediate traders. NQ, you have to stick to MNQ. Yeah, I think MNQ for sure. How are you? How are you? What about you? TFD is definitely more like Traders Rehab, and it's helped me with my other accounts, to be quite honest. Okay, let's go to Discord and see if anybody has questions there, and then I'm gonna. Sorry, guys, I know this is kind of running over. Let's see. Yeah, those that switched to silver definitely got destroyed because they did not. Yep, DCA is pretty much suicide. Yeah, I don't do DCA. The only time you would do DCA is more if you're like trading MNQ and you're in with one and you can add in, one every 10 points and really like have a. Otherwise, no, I wouldn't do it. That's why I have a hard stop loss. Unless I'm doing the FFMAT trades, which I'll have a starter position and scale more in at some point. I would say the most traders move from ES to NQ. I don't know many that have moved from NQ to ES. Some trade both. Yeah. Can you copy trade prop accounts on Tradeovate? So if you have a Tradeovate account, right now Tradeovate will only allow you to, I believe each tab. Fenster, do you trade with specifically with Tradeovate? And can you do you have to have like each tab open? So I have Tradeovate accounts, but I use NinjaTrader because NinjaTrader allows me to link my Tradeovate accounts into one. So I know that there's a copy trader that is it's in its end of beta testing where they're going to allow like different prop firms from Tradeovate to be traded on a cloud. Well, and I think also locally, not just a cloud. So you can trade different prop firms with just Tradeovate. Otherwise, I think you have to have different tabs open and logged in to different Tradeovate accounts. Tradeovate does have its own copy trader on the bottom. Yes, the new cross from copy trader. Okay. All right. Let me go ahead and do the drawing. Okay. Quick draws. What pyramid? Okay. All right, let me just do the drawing. I need to get ready for my vacation stuff. Satish B. Satish, are you here? Where is my thing? Hello? Speak now or forever hold your peace. Okay, well, you're here. Okay, can you DM me, please? I'm going to send you the link or the, lucid trading thing. All right, guys. Thank you all for hopping on today. Hope you guys learned something new. I got to check in for my flight before my friend kills me. She keeps messaging me. So, all right. Have a good day, everyone. I'm not going to be here next week, Stan. I'm going to be gone for the week. But I'm still going to hop on, I think, Tuesday and Wednesday, just to kind of, I won't have all of my stuff that, like my order flow footprint, but Jolene's really good too, guys. So, all right. Bye, guys.